Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today we're going to talk about one of my easy swinging poor man cover call trades where I did not use that much money up front, but I was able to generate some $200, $300, $400 a month on a consistent basis using a large S&P type company that doesn't move much. And what I mean by that is it's pretty much trading exactly where it was when I started my poor man's cover call trade back in May. So I'm going to show you the stock, I'm going to show you the trade, I'm going to show you how much I've made, and I'm going to explain why I'm going to close it today. Because that's what I'm going to do. I'm going to close this poor man's cover call trade. We're going to end it, put the money in the bank, and then what we're going to do is look for another poor man's cover call trade. In fact, I already have that one dialed up. My members will get that one. So if you're interested, I have a 1 free month offer I'm going to mention here in a moment. But look, what you're about to see is the poor man's cover call tracker. I want you to get your very own poor man's cover call tracker. Go to my website, cptdashboard.com, click free spreadsheets. And what I want you to do is download your very own copy. I'll show you where you do that. You just scroll down here and you'll see the poor man's covered call tracker. It's been downloaded over 150,000 times. We have to keep track of our trades. And I'm going to show you what I mean by that. Because remember, when we use a Leaps call option in lieu of buying the shares, generally it's a premium only trade. And what that means is we're going to write out of the money strikes, collecting premium, most likely not having our shares taken away, and we're going to do it again. And I'm going to show you how many trades I've done. So let's go ahead and get to this. If you like anything you hear today, I want you to subscribe to the channel. It's right there. It's free. And hey, look, if you like the video today, bang that like button. It lets me know you like what I'm doing. Now, what we're doing is we're talking about Gilead. Now, back on May 12th, I talked about Gilead as a poor man's cover call trade. In fact, I sent this to the members as a trade idea video. And that's what I do. A lot of times I'll do videos, little short videos, so they can see what I'm seeing. And in this case, we were talking Gilead. We were talking the poor man's covered call. And as you can see, if you dial up, this was a 6-minute video, and we went straight to the chase talking about the poor man's covered call initial trade setup and how I was going to set it up and how my very first trade would be profitable. Let's go ahead and look at my poor man's covered call tracker for Gilead and see where we're at today. So back then, I did that video for the members, $78.32. That's where Gilead was trading. I dialed it up to where we were going to buy the 47 Leaps call option. It was going to be a January 2024 expiration. Now remember, this was in May 12th. Paid $31.95 for that. And when you look at the time value cost, it was going to be 0.8%. We were only going to pay 63 cents in time value cost. So for me, that was nothing. Chump change. We're going to make that trade. I went ahead and dialed up the first covered call. It's trading at 78.32. I plug in the 81.50 strike. We get a $1.85. The total trade out the door, $4.88 per share, or 15.26% cash on cash for this 30-day trade at the time. Notice that would have been $4,800 on 10 contracts. And I didn't do 10 contracts. I ended up doing 5 contracts. So let's just divide everything by 2. Well, as the trade progressed, you could see each line item from top to bottom, very first trade to now my current trade. Back on May 9th, I went ahead and wrote that covered call. Actually turned out to use the 80 strike. You could see it right there. Ended up picking up a $1.33. I ended up buying that option back. Probably means Gilead fell. And I went ahead and bought that option back for 99 cents, pocketing $500. Now, we do this all the time. We put on trades, and as the trade moves forward, if I can buy the option back, meaning I got paid $1.33, the stock falls, I went ahead and paid 99 cents. So the difference between the $1.33 I got paid and the 99 cents I paid to get out of the trade, well, turns out to be $495. So we bag that. Then we do another one. And as you can see, it didn't take long before when it's trading at 77.77, I go ahead and do that same 80 strike, get 53 cents, and that trade goes to fruition. Now, we do this again and again. So as you can see, we did it in June, we did it in July, and here we are in August, where I'm thinking about buying back my current covered call. You could see this is the last covered call I did. It's going to expire this August 25th, and it's in the money. So as you can see, the 81 strike, although the stock is not in the money, meaning it's not trading over 81, I would have to buy this option back because I didn't get much money for the covered call premium in the trade. So although it's not trading above my strike price, the covered call option still has more value, and I'm going to have to buy it back and lose money. What I mean by that is this. I got paid 91 cents. Right now, that option's trading for $1.21. There's time left in this trade. Even though Gilead's trading for $79.90, there's still enough time where my 90-cent option is still worth $1.21. So, I'm sitting here saying, look, if I want to close this trade right now, and we're going to talk about why I want to close this trade right now, because I know you're saying, dude, it's literally next week. Just let it go to expiration, end the trade next week. You collect everything and you can wash your hands of it. Well, here's the deal. That's some $18,000 that I have a plan for. We're going to talk about that plan here in a moment, so stick around. But here's the deal. If I buy this option back right now, I pay $155 to clear the current trade. Got paid 90 cents, going to have to pay 120, clears the trade. But notice, right now, my Leaps call option is trading for $37.45. So to officially close the trade 100%, we buy back the near-term covered call, losing money. Then we sell our Leaps call option, making money. And as you can see, after all of the covered call rights that I've done with this stock, I will make $2,000 cash on cash for this trade, or 11% since May. I know you're thinking, that's really not much based on a 3-month trade, 11%. Well, what I'm going to tell you is this, it is. We're making 3+% month over month. But another thing that absolutely intrigued me about the trade is that I could buy 5 contracts only using $18,350, and we're making some $300, $400, and $500 with these little crumb trades. Now this is going to be eye-opening when you see the chart, because this is one of those sideways to sideways trades where if you know how to use the strategy, if you are dedicated to managing your trades, you can pick up tiny little crumbs month after month after month. Let's go to the chart and take a look at where Gilead's right now and where it's been since May 12th. Now remember, the members got all this, and I got a 1 free month offer for you. Go get it. Go get it. Join the membership. You're going to get videos like I did yesterday talking about how I close a poor man's covered call trade, but I better pick the right strike price. Because if my shares are taken away in my Leaps call option, which moves at a certain delta, if it doesn't get there, I'm going to lose money. Did that video yesterday. Go to cptdashboard.com, click Upgraded Dashboard, get your 1 free month offer. Would love to welcome you aboard. Now back to Gilead, what I want to show you is this. When we placed that trade and when I did the video, I told the members this. Gilead trades in such a sandbox, it's pretty bankable. Now, it's not going to fall off the table, and typically it's not going to jump off the charts, okay? So this sandbox it trades in is pretty darn bankable. Sideways to sideways to sideways. And for the most part, that's what we want. We want those great S&P type companies. Wall Street loves being in them because they pay a big dividend, and they trade sideways to higher. In the case of Gilead, it really hasn't. Got involved right here, May 12th, and you can see it's literally trading where I got involved. And along the way, the buy and hold investor makes zero outside of the dividend. And by the way, it's only one dividend. And it's definitely not $2,000 that I've made with the poor man's covered call. We have picked up little crumb trades every single opportunity that presented itself. Now, I didn't make that many trades, but you get my point. As the buy and hold investor is literally buying right here, and they're collecting a dividend, and they're hoping it goes higher. See, I don't want to be in the hope and pray game. What I want to do, I want to get involved in Gilead, write the covered calls, collect the money along the way, and when we want to end the trade, we can actually outpace the buy and hold investor hands down. And in this case, it turns out to be just that way. They will have made nothing outside of a dividend, which I think is 60 cents. We knocked down some 11% or $2,000. Now, the reason I'm showing you this trade is for a couple reasons. I want to show you that you can use great S&P type companies and actually trade them sideways to higher, picking up little crumb trades along the way. We don't have to overreach and try to make thousands. What we can do is invest a little bit of money, make great trades, pick up little crumbs that are around $200, $300, $400, $500, and hey, then we can end the trade, usually on our terms, and I'm going to make money. And I'm going to be able to use that money and roll it to another trade that I'm going to share with you here in a minute. But here's the deal. I'm showing you this video largely because you can use the poor man's covered call to generate higher cash-on-cash percentage gains using less upfront capital, but you're still using the same stocks. You're using Gilead and Bristol Myers and Microsoft. I'm using Honeywell. I mean, who is investing in Honeywell, right? Well, I'm using it for a poor man's covered call. And that is what I'm talking about. We could have great cash-on-cash percentage gains outpacing the stock market hands down, and the stock does not move anywhere. So I want you to learn the poor man's covered call. There's a lot to learn about it, and I've done tons of videos on this, and the members keep getting hit with video after video because I really want to share my experience with them. I am in the trenches, man. I'm using poor man covered call strategy on Gilead, AMD, Honeywell, Square, PayPal. I even have Leaps call options on Bros and Pfizer. I love using this strategy. Why? We invest less, we can make more cash-on-cash percentage gain. And I'll tell you what, at the end of the day, because it's largely a premium-only trade, I'm going to be more active in my trading. And what that means is I'm always looking for another opportunity. That opportunity is the next trade I'm going to do, and I'm going to outline it exactly to the members after I get done with this video. It's on AMD, what I'm going to show the members in their member-only video. But here's the deal. This is why I'm thinking about it. AMD has absolutely been trading in this range ever since earnings. And I'll tell you what, when earnings happened, this thing was trading at 119. It peels all the way back to 107. It is resilient in this sandbox. Where it goes from here, I don't have a clue. But what I believe is that when it was getting kicked in the absolute ribs after earnings, it only got to 107. And what I'm thinking is this. You can use great stocks, less capital, picking up little $200, $300 crumbs every single trade. And I'll tell you what, there's not much risk when you get involved at the bottom of the stock's range. And Gilead's bottom, since I've owned it, has been about 76. And it trades to about 81. That's a great sandbox trade, and we played it multiple times. And I believe I can do this time and time and time again. We hone our skills, we learn the strategy, and then we actually go out and execute on that strategy. But wouldn't it be nice if you got an email or a video from someone like me that's eyeballing the next trade? Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.